my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A second bearish black crow yesterday and a gapping lower open since filled and a move down that alleviated the bullish pressure set upon the upper tine of the December 2020 to late January 2021 bullish shift pitchfork. As I said yesterday and other recent days, it seems there are a lot of contradictory forces at play here, to which I'd only add also odd forces. The market's move lower punctured and closed below the top of the old broken rising wedge pattern that's currently at 69.49, but only managed to puncture the important January 2021 high at 69.10 until it was finally halted by the March 2020 high at 68.71. Below we have the rising short medium moving average currently at 68.39 and the uptrend currently at 68.07 that made up the lower trend line of the old January to March sideways triangle. So far today, another obtuse performance, what looks like an indecisive doji cross based on the broken upper wedge trend line at the moment, maybe a little bit higher than that and into a spinning top. German DAX futures. Okay, yet another strange day here as well. After the new all-time high 2 days ago, that was also a second indecisive spinning top plus a 2-day matching low pattern, a pattern that ought not to show up where it did. Well, we yesterday had a gapping move lower since filled that was only halted in its decline by the rising short medium moving average currently at 15.001. And that partners with the late October 2021 today uptrend currently at 14.928. All this comes on the back of the last 2 weeks action of a fairly rare compound weekly key reversal up. One would have liked to look upon this rare pattern as a superior bullish indication, but that's not what the market has said this week. Anyway, the potential is still there for a try higher, possibly towards target X1 in the 15,800 area. A more recent topside target with a small diamond continuation pattern. But in between there and where we are, we still have the projected 50% Fibonacci line at 15,629. So far today, the start of a small move higher, looking like a small reactionary bullish harami right now. US E-mini S&P futures. Now yesterday I pointed out how Tuesday's actions were perhaps a seminal day, being as it was a key reversal down that punched down through and closed below the important lower tine, currently 41.58, of the influential if broken December 2020 to early 2021 bullish, early February 2021 bullish Andrews pitchfork. All this coming as it did on the back of an immediate countering weekly key reversal down last week. Well, yesterday seems to have continued the crucial nature and actions, with a drop down through the Fibonacci congestion at 41.10, 41.08, the punching down through the key combination of support, the rising short medium moving average currently at 40.81, and the important projected 50% Fibonacci line at 40.82, only halting at the lesser Fibonacci level at 40.53. Then turning all the way around, yes, all the way back up to finish day yesterday as an indecisive doji cross, with possible bullish aspirations. It's one hell of a move down and then back up, and ultimately indecisive. This is a microcosm of the bigger picture, a fractal interpretation, if you will, of what else is going on, as we have the overhang of the immediate countering weekly key reversal and that key reversal down still influencing everything. Does last week's action mean that the first bullish weekly key reversal is cancelled and superseded by the second larger bearish one? As I've said, the answer is still, as I've said all this week, yes and no. I'm sorry to continue to sound obtuse, but it's important to understand this. On the surface, it does show a stronger bearish pattern has overcome a quite strong bullish pattern immediately. For those who like their answers simple, there you have it. However, the true answer is more complex. What it shows is the depth of indecision this market has undergone since early April. Hence, I would say it was, and still is, indecisive, even now, purely because of its unusual nature. This is one worth watching carefully, even more than before. So far today, another period of odd behaviour. A dip down to the combined support of the short medium moving average and projected 50% Fibonacci line before pulling back up again to look like yet another indecisive doji cross right now. Please note the two supports below are separating, so their combined supportive strength, given which is greater than each individually, is actually dissipating. French CAC 40 futures. A third bearish black crow yesterday, a gapping move lower after the previous session's combined key reversal down and bearish engulfing pattern, closing further below, once again, the lower tines of the December 2020 to January 2021 bullish Andrews pitchfork, currently at 64.11, and the new late January to late March bullish shift pitchfork, currently at 64.21. Now the utility of these two bullish Andrews pitchfork is seemingly coming to an end. If we end the week under them, which seems likely right now, then I'll retire them. Anyway, back to yesterday. It was a first close back under the significant 50% projected Fibonacci level at 63.48, as well as the important April high at 62.80. Yet that is not all, and this is perhaps the most unusual thing. Yesterday was also a hammer pattern, usually seen as being bullish. All this action is in the frame of last week's weekly key reversal up, for which yesterday's action is a further sort of disappointing move. So far today, a higher open over the April high at 62.80, but yet keeping within the main body of yesterday's action and not trying to fill the gap left over. Thank you for listening. This short version of broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.